Hello everyone, this is Ashish with Investor Friendly CPA, and today's topic is qualified improvement property. These are improvements made to your non-residential properties. Now, why is this so important to understand this? If you invest in short-term rental or if you have any non-residential commercial properties, then this really can save you huge amount of taxes, and that's what we're going to talk about. I'm going to show you why it matters I'm going to share some numbers and how to make sure your repairs and how to time them correctly so you can get the most out of the qualified improvement properties and your repairs you make your properties. Okay, so I'm going to share my screen here. So let me show you again. Don't focus on a lot of these numbers. Doesn't really matter. All you need to focus on is one number, which is going to be in here, and we'll talk about how it works in the next 2 minutes. So this taxpayer, if let's say has $373,000 of taxable income, and then buys this $800,000 property, commercial property, right? Which is short-term rental is also a commercial property, saves $56,000 in taxes. Very normal. Everyone focus on this $56,000 here. Now let's talk about the qualified improvement property. If someone repairs the property and if it qualifies as QIP versus it does not qualify as QIP, how does that change your tax savings? Look at this $56,000 here. This is how, if that $100,000 is a QIP, the tax savings goes to $80,000 from 56 to 80. Now, if this was not a QIP and if it's just an improvement added to the basis of the property, then the tax savings is 62, from 56 to 62 versus $80,000 you just saw when it's QIP. That's the difference it can make, and that's with 100% bonus depreciation if it ever comes back. Okay, I'm just telling you how it works. If this was in 2024, let me show you. So tax savings is now $34,000 when you buy this $800,000 property. If you put $100,000 as a QIP in 2024, from 34 to 50, versus if I change this amount to just a normal improvement without qualifying as QIP, then that's 38. Not much, right? So that's the difference we're talking about. That is why timing your repair is important. Now let's talk about how can you achieve that. Qualified improvement property, you have to meet the requirements. The first requirement is basically it has to be on the internal, it's not an external thing, meaning you cannot change your roof and sidings and it qualifies as a qualified improvement property. It's just the internal, non-expand, it cannot be added, meaning you cannot add a room or extra room in your property or expand your property. Those are not qualified improvement property, QIP. Only thing is internal renovations, like you renovate your floor, renovate your kitchen, renovate your bathrooms. Internal renovations qualify as a QIP. So how to qualify as QIP? That's the main issue. Let's talk about that. It's about timing. If your property is already a commercial property, then any improvement you make automatically qualifies as qualified improvement property when it is that inside property. Now, all the commercial properties, like let's say hotels and all the strip malls and all those things, they're always going to be mostly any kind of improvements you make is always going to be a QIP. However, what I'm trying to focus on today is on these short-term rentals. When you buy a short-term rental and you try to go and make an improvement, you have to understand the timing of the improvement. If you bought this short-term rental from someone else which already had this property as a short-term rental, then you can make improvement whenever you want, and it will qualify as qualified improvement property. Let's say you close on the property, make a bunch of renovations, and put that in Airbnb. The renovation qualifies as a QIP. However, if you bought a property from someone else, someone else was a primary resident and you bought it, now you're going to make it a short-term rental. Or you had new construction, you bought it, and you're going to make it short-term rental. If you make a huge improvement on that property without renting it out, it is not going to be a QIP. So the right strategy is to buy the property, and if it was never a short-term rental, please make the renovation after you put this in market, meaning after you rent out a couple of times. Let's say you put that in the market, someone rents out 2 or 3 times, stop the booking, and then do renovation. That would qualify as a qualified improvement property, and you can see those differences I just showed you on the screen. So Bottom line is this: it can have a huge tax savings if you understand the timing of when you can make the improvements. It's more important for the property that was not a commercial property before you bought it. So for short-term rental, please understand this timing and you'll regret. Thank you for tuning in. If you want to see these kind of videos, please follow us and we'll share more. Thank you.